Hello, I believe you guys are doing fine. Okay, today we're talking about risk management. Okay, this happens to be the bedrock of whatever you're going to do. Okay, if you don't have a good risk management portfolio, all right, no matter how good you are as a forex trader, you would always blow your account, you always lose money. All right, it's a simple, but it's more complex in terms of you trying to apply it in a live market. Okay, so that being said, I would like to share how I got consistent with my funded account and my personal account, consistently making money in as much as I might have some losses, which is normal. It's cost of doing business. Losses should be treated as a normal thing. Okay, don't see it like you don't know what you're doing. It is normal to have losses, but then again, your losses shouldn't be more than your profit. Okay, so I would share with you two portfolios of two traders. You have trader A and trader B. Then at the end of the session, you would know the one to choose and a path to follow. Okay, so without any further ado, when we talk about risk management, we're talking about your account sizing and how much is normal for you to risk per trade and make it consistent. Okay, it is not necessarily mastering technical analysis. You must also know your risk management. All right. Now, uh, trader A has a $10,000 funded account. Okay, this is his portfolio, so we're going to dissect it one by one. All right, he has a $10,000 funded account. Okay, and he trades only GBP USD. All right, now trader A, risk between risk is 0.5%. Okay, and his target is consistent with 5R. That is his risk to. If he risks $50, he would expect to make $250. You understand? Because you are going to multiply your risk with your reward. All right. Just multiply how much you are willing to risk, and then with the reward you would get if the trade should go in your favor, that would be your outcome. All right. So he has a $10,000 funded account or personal account. You understand? Then he takes this risk to risk $50 per trade. All right. And the first one ended in loss. So he lost minus 0.50. Okay. This is where it gets tricky from the second day because a whole lot of traders, in as much as they tell themselves that they want to risk $10,000, okay, then if they have a loss, you get automatically your account size is below the initial balance. Okay, your initial balance was 10,000 and you lost a fraction of it. Okay, now for you to get a good risk management portfolio, all right, the initial of the next day is no longer 10,000 but 9,950, which is subtracting the loss he encountered the previous day. All right. Now, uh, he goes back on the chart, makes his analysis, all right, then executes a trade to make 5R again. All right. Now, if you notice the discrepancy here, initial execution was $50, okay, but because he lost the first trade, now the money he's gonna use in executing is no longer 50 but 49.75, and the risk is still consistent. You understand? The risk is still consistent. Then again, as you can see, initially it was $50, still on 0.5%, and second day 0.5%, but it's now lesser. Okay, because he took account of the account size. All right, he didn't just execute because he wanted to make money. Okay, this is where you should think in terms of rollover. Okay, if you are having a loss, the new day should be like the money you see in your account after 24 hours should be your equity right now. It's no longer the initial one you thought you had because that money is no longer there. Okay, so that being said, second day again, he executed and he lost. He lost the money 49.75. He lost it. Okay. Then he went off the chart. Okay. He's consistent in taking one trade per day. Okay. That brings me to the next thing to say. Most of you, okay, you have this mindset way back in the university that losing is a very bad thing. Okay, for you to understand forex, you have to unlearn what you think you know in the university. All right, losing or losses, like I said earlier, is cost of doing business. You cannot just automatically be winning always. Okay, at some point, if it happens that you lost, it is cost of doing the business. But you should also have in mind that your losses shouldn't be bigger than your wins. Okay, now on the day three, he came back on the chart, all refreshed. All right, now look at the account size now. He lost this money here. Okay, now the account size went down to $9,900. Okay, if he doesn't have a good risk management, he would have still been, kept it consistent at 10,000 here. Okay, he would have been consistent at taking this trade at 10,000, but it wasn't so. Okay, now he went again, did his analysis, target is still 5R, risk is still zero point 0.5 consistent, and he was risking $49.5. Okay, now on this day, trade went in his favor. He made $247.5. Okay, now from these two trades, you can see that his profit is bigger than the losses he already had. Now, with this trade alone, he is already able to recover these losses he had on day one and day two and still in profit. Okay, this is a good risk management. He is not gambling, he is being consistent with a principle that guides his actions. Okay, so you need to be consistent in trying to have a good risk portfolio such that even if you lose 4 or 5 trades, you understand, you just need one TP or two TPs to keep your account at profit back, which is obtainable. But the problem is that everybody wants to buy the Lambo, everybody wants to live that lifestyle, everybody wants to have six figures, but you just don't know what you're doing because you believe that forex is a get rich quick scheme. So you just feel like any figure I just put there will work, all those kind of uh, daylight dreaming. Okay, so that is not it. You're supposed to have something that you work on that should make you a good and a profitable trader. Now, on the next day, he went back on the charts, noticed how the account balance increased from 9,900 to 10,147.5 cents. Okay, and in as much as he was in profit, he didn't over leverage. Okay, he kept it consistent at 0.5%. Okay, most of you here, the problem It's not that you don't know what you're doing. The problem is that you don't know what you're risking. Okay? When you see profits, the euphoria of winning gets to you and you feel like you've cracked the market. Then from 0.5% you increase your loss your risk to like 4 or 5% so that I can make huge figure because you already started imagining that if only you had did like 4% here, okay, or 5% here, risking $200, this trade would have made you 1,000 and some dollars. Okay, then the next trade you decide to over leverage and you are in loss and you just blew your account unnecessarily. Okay, so it is not all about taking trades, it's about knowing what you are going to risk on that trade. And once you take that setup, just have it at the back of your mind that it's a business, you understand that regardless of the outcome, you're having something like you're consistent with, which is the risk. Okay, so on the next day, he went on the chart. Okay, his balance is now 10,475, 1475. He took the same risk. Target is still the same, and now he's risking $50 on this trade to make over $250. Okay, now trade went in his favor again. Okay, and then he made 253.7 cents. Now he's still stable, like he's still sane. Okay, but then again, something that happened. Maybe he had something up his sleeves, like uh, maybe markets wasn't actually showing him setups. Maybe he wanted to pass the account or something. Maybe he had issues that is messed up with his mind that he wasn't just really focused. Or maybe market is just doing why it's called the market, being all about probability. Okay, he doesn't you don't know the outcome of that trade you're taking. Okay, if you think in terms of probability, you don't really have issues based on your emotions. Okay, you're not scared of losing that trade. Once you've made up your mind that regardless of the outcome, you just take your trades as a trader that you are. You are not trying to show that you really know the market per se because nobody really knows the market. You have your edge. So your edge is what you're going to work on in perfecting. So you're trying to think that you know the market. That's a whole fat lie. Okay, just execute all trades that fit your plan, that fits your criteria, but do not over leverage, do not over risk. If you are starting with 0.3%, okay, I advise most persons to go within 0.3 to 0.5. Okay, when you're consistent with 0.5, like you know that you are already consistent with 0.5%, you can scale up to 1% and take like 4 trades in a month and you are done. Like you are done for the month. Okay. Then if you're still sticking with 0.5, it is super cool because you have opportunities of taking 2 trades in a day, risking 1% of your equity. Assuming one is loss and one is TP, you are still in profit. Okay. Now the next day he came back on the chart, did his analysis. Risk is $52, and as you can see, he lost this one. Like he entered this losing loss. Okay. This is 1, 2, 3, 4, 5. So on day six, he came back. All right. His equity went down from 10,401 to 10,349. Okay, but he's always consistent with his risk. Now he had a loss again. Okay, he lost the trade. All right. So he's still mentally stable because in as much as he lost this trade, his equity is still protected and he's still in profit. Okay, so he's just gonna keep executing those trades. Okay, now The next day, again, he came back on the chart, did his analysis, and then bam, had another loss. All right, so that is like three losses in a row, just like maybe he had a bad week. Okay, it happens to the best of us. Okay, but then you should be consistent with your risk. You should keep showing up on the chart every day, regardless of how bad the previous day was. Okay, every day is a whole new day to make consistent money. If you're gonna be consistent in showing up to the chart every day, studying, back testing, forward testing, just keep at it. Keep doing that boring thing. You understand? When it begins to pay off, you would be glad you didn't give up. So the next day, he came back on the chart and took a trade. As you can see, he made profits. After the three losing streak he had, he made one profit. And these three losing streaks is supposed to be roughly $160, $153 point some cents. Okay, and then he made a huge profit on 5R, keeping it consistent. So he was able to clear those this drawdown he had, okay, and the account should be back in profit. Now the next day, his account grew from 10,245.96 cents to $10,502.11. Okay, now he took the next trade. It was loss. Okay, it is still cost of doing business. All right. Now, uh, on the last day, which is the day 10, he came again and took this trade. Okay. As he took the trade, it was TP. Like he made the profits, still keeping it consistent. All right. Now he made a total of $10,710 25 cents. Okay. In as much as he had, analyze. He had total of 10 trades. He lost six and he had only four profits. Okay. And you can see, like, normally, if you're in the other perspective of what you are told to understand about, about losses, okay, he had six. So automatically he's supposed to have, had a serious drawdown or something. Okay. But what kept saving him was what his risk management. He had a very good and a consistent risk management. He does not over leverage. He keeps it cool at 0.5% per trade. Okay. He had six losses and four profits, and he's still able to raise the account to $710 in profit. That is like 7%, if I'm not mistaken. That is like 7% in profit. Okay, this is good. This is a good, trading portfolio. Okay, now let's analyze trader B, and then we'll now make comparisons to which one would suit our plan. Okay, so we have trader B. Okay, he trades the same account size with trader A. All right. The only thing he managed to do in this portfolio was to keep his account size consistent, just like trader A did. But because he saw many videos on YouTube, people showing off their lifestyle, and he want to make it happen ASAP. Okay, he now takes trade without calculating risk management. He just execute because his hand is always on fast trigger and MT4, MT5. Okay, so on the first day he took 2% of his account equity. He risked to get 5R. Okay, so he's risking $200 to make $1,000. Okay, and on the first day he had a loss. All right, so after the loss, he came to the chart the next day. He his account went down from 10,000 to $9,800. Okay, then he said to himself that maybe I need to reduce my risks and let's see if I can. be able to make it. Okay. Now he took down his risk from 1% to 2%, and his risk to reward, he dropped it again because he was scared of losing. Okay. Maybe he had a mind to leave this trade at 5 hour, but because he was scared of losing, the trade went to 2 hour and he was to raise $98. He closed earlier than this. All right. Now he had a profit of $196. Okay. His account came back to life again. All right. He made 996 dollars. Okay. Then he said, I think I've cracked this forex. He just went to YouTube. He saw a young guy, bought a Lamborghini, bought a house, and he want to buy his own as soon as possible. Okay. He took the trade at 4% of his portfolio. All right. And then he said, if this one can give me like three rigs to reward, I would close. That should give him, like, if he were to have made profit, that would have been $1,200. Okay, in profit. Sorry, there's $1,200 in profit. Okay. Then he had a loss, a huge loss. Okay. He lost with 399.686 dollars. He was scared. The emotions started rushing in. The emotions, the sentiments, the blame, the fear, everything started kicking in. Okay. And then he was really scared of taking the next trade. But then he came on the chart again. He said, okay, if I can manage to take down my risk, I can be able to make it better. Okay, now his equity went down to $9,596. Okay, he decided to use 0.5% risk, but then he was too early because of fear. Fear has already gripped him. He doesn't have a consistent portfolio. Okay, fear has already taken a hold of him, and he risked 47.98 cents. Okay, and then he made a profit of $95.96. Okay, had it been he had a consistent risk portfolio, this win alone should have helped the account coming back to life a little bit, but it didn't happen. Okay, then after using 0.5, maybe he had a rethink and said, I wished I used a bigger lot size, I risked better. I would have, been happy. Then he went on the chart. He said, okay, let me just do this. And he used 1%, okay, to make 5 hour, but that is risking $96. Okay. And then he had this trade running in profit. He couldn't just watch his trade from profit go down to loss. Okay. It happens to everybody. All right. Then he rushed and closed the trade, and he was happy, like I managed to make $290. He posted the TP. He was really happy. The euphoria started kicking in. Like, he felt like, I'm now super good at this, man. Now I can just do this over and over and buy my Lamborghini. All those kind of lifestyle we all want to get. Okay. But then on the next day, the account went from 9,600 to $9,982. Now he used 3% of his equity because he had two winning days. Okay, so the third one to him, he was already counted it as profit, but then he lost. Automatically, this loss is even bigger than the win he had the previous day, which is a very bad way of taking trades, and this is way too bad. Okay, but then uh, the trader will keep trading. Okay, and the next day He came on the chat. He said, if only I can drop my risk and, let me see how it goes. Then he went down to 2% of, on equity, and then took a trade risking $193.67. Okay, he made $581. This is a whole lot of money for him, coming from this uh, drawdowns and all. He made a huge profit. Okay, so he was really happy that his account is back at 10,000 and in profit. Okay, then he went hard again. He used the same risk. Okay, and from 9,600 to 10,264. Now he risked 4% of his account to get the same figure he did the previous day. All right. Now that is risking $410. And unfortunately, trade went against him. He lost this trade here. Okay. So when he lost this trade, he became sober. All right. Imagine being in profit of $264 and then because of carelessness, you went back down. Okay. Now he's down at $9,853 again. Okay. When he told himself that he will never over leverage, he went as low as 0.3% risk per trade, risking $29.56. Okay. And then this one went in profit. He was happy that what he said to himself is working. Okay. Meaning that he under leveraged, okay, and made money. All right. Then a quick one. One thing you should know as a trader is this: irrespective of the fact that you are having a losing week, okay, try as much as possible to keep your risk management consistent. If you want to use zero point 0.3 as a trader, continue using it. Don't jump from zero point 0.3 maybe because you're in profit, just like trader B. You flew from zero point 0.3 to 0.5, 0.7, like you're just dabbling around risks. Okay, it is not wise to do. Okay, you end up losing more than you win. That's just the honest truth. So if you can keep it consistent, you would do much better. Okay, now he told himself that I can't continue doing this. This is too small for me. Okay, I would